Hi friends, welcome back to Bharath Nivesh with Mithun. If you are planning to buy any stocks this week, please don't invest blindly. The coming week could decide the direction of the Indian stock market for the next few weeks. Quarterly results are coming one after another. Foreign institutional investors or FIIs continue to influence the market. Global events are creating uncertainty. Crude oil prices, the US Federal Reserve meeting, and domestic earnings can all trigger sharp moves in Nifty and Sensex. In today's video, I will share the top 10 stocks that deserve your attention this week. I will also explain why they are in focus, what could move their prices, and what investors should watch before taking any decision. So let's begin. Before we jump into the stocks, remember one thing: the stock market doesn't reward people who are in a hurry, it rewards people who prepare before others. Many beginners buy a stock because someone on WhatsApp, Telegram, YouTube, or social media says it will double. Professional investors first ask one question: what is the reason this stock should go up? That's exactly what we are going to discuss today. In the number 10, we have Wipro. Let's start with Wipro. Wipro has been in the spotlight because of its quarterly results and corporate actions. The biggest thing investors will be watching is management guidance. Is the demand for artificial intelligence projects increasing, or clients spending more on digital transformation? Will revenue grow faster in the coming quarters? If management sounds optimistic, IT stocks could receive fresh buying interest. But remember, good results alone don't always mean the stock will rise. Sometimes markets expect even better performance. So watch both the results and the management commentary carefully. In the number 9, we have Persistent Systems. Persistent Systems continues to benefit from the AI revolution. Many companies worldwide are investing heavily in artificial intelligence, cloud migration, and software modernization. Persistent has positioned itself strongly in these areas. Investors should monitor whether order books continue growing. If management announces stronger demand, this stock could remain one of the strongest performers in the IT sector. In the number 8, we have UltraTech Cement. India continues to spend heavily on roads, metros, airports, railways, and infrastructure. Whenever infrastructure spending increases, cement companies become important beneficiaries. UltraTech Cement is India's largest cement manufacturer. Watch cement demand, government infrastructure spending, and input costs. Lower fuel costs can improve profit margins significantly. In the number 7, we have Godrej Properties. The real estate sector has surprised many investors over the last few years. Luxury housing demand remains strong. Developers are reporting record bookings. Interest rates also play a huge role here. If borrowing costs remain stable, real estate stocks could continue performing well. In the number 6, we have DLF. DLF remains one of India's biggest real estate companies. Commercial office demand, premium housing, rental income, all three remain important growth drivers. Investors should closely monitor sales numbers and project launches. In the number 5, we have Larsen and Toubro. Whenever people think about India's infrastructure story, one company immediately comes to mind: Larsen and Toubro. Whether it's highways, metro projects, defense manufacturing, green energy, or international engineering projects, L&T has exposure everywhere. A strong order book usually indicates healthy future growth. In the number 4, we have Reliance Industries. No market watch list is complete without Reliance. Reliance influences Nifty more than many investors realize. Its businesses include telecom, retail, oil and gas, green energy, digital services, and artificial intelligence initiatives. Even a small movement in Reliance can impact the entire market. In the number 3, we have ICICI Bank. Among private sector banks, ICICI Bank has consistently delivered strong earnings. Keep an eye on loan growth, deposit growth, net interest margin, and asset quality. If banking results remain strong, Bank Nifty could recover quickly. In the number 2, we have HDFC Bank. HDFC Bank remains India's largest private bank. Recently, the stock has faced pressure despite strong fundamentals. This is exactly why investors are watching it closely. Institutional buying could trigger a recovery. Watch FIIs, watch volumes, watch support levels. Sometimes the strongest companies become attractive only after temporary corrections. In the number 1, we have HAL. Finally, Hindustan Aeronautics Limited, India's defense sector, continues receiving significant government attention. With increasing defense spending, aircraft manufacturing, exports, and indigenous production, HAL remains one of the most discussed stocks. However, defense stocks often move sharply after news. Never chase momentum, always buy with proper research and valuation in mind. If you look at the 5 major events that could move markets, number 1 is quarterly results. One bad earnings report can erase months of gains. One excellent earnings report can push stocks to new highs. Number 2 is foreign institutional investors. If FIIs continue selling, markets may remain under pressure. If buying returns, we could witness a relief rally. The number 3 is the US Federal Reserve meeting. Interest rate decisions in America affect markets worldwide. Indian IT companies are especially sensitive because many clients are based in the United States. The number 4 is the crude oil prices. India imports most of its crude oil. Higher crude prices increase costs for airlines, paints, chemicals, logistics, and many manufacturing companies. Lower crude prices usually benefit the Indian economy. The number 5 is global news. Any unexpected geopolitical developments, trade tensions, or economic data can quickly change market sentiment. Now, many of you will ask, should I buy now? Here is my approach. I don't buy because everyone is excited. I don't sell because everyone is scared. I buy businesses, not stock prices. Whenever fundamentally strong companies fall because of temporary market fear, that's when I start paying attention. Remember Warren Buffett's famous principle: be fearful when others are greedy. Be greedy when others are fearful. But being greedy doesn't mean buying blindly. It means buying quality businesses after proper research. If you ask me, 3 mistakes beginners should avoid. The first one is never invest based only on social media. The second one is never invest your emergency money. The third one is never invest without understanding the business. Knowledge always beats excitement. One sector I would like you to keep an eye on is the green energy sector, and one company that has caught my attention is Orient Green Power. The company is gradually diversifying from being primarily a wind energy player to expanding into both wind and solar power. With recent progress on its resolution plans and India's continued push towards renewable energy, this is definitely a stock that deserves a place on my watch list. Compared to many other green energy companies, I believe it is trading at a relatively discounted valuation. However, always do your own research before investing. This week will be extremely important for Indian markets. Quarterly earnings, FII activity, US Federal Reserve decisions, crude oil prices, and global events will decide market direction. Keep your watchlist ready, stay patient, avoid emotional decisions, and remember, successful investing is not about finding the next multibagger every week, it's about finding big mistakes consistently. If you found this video useful, please hit that like button, share it with your friends and family, subscribe to Bharath Nivesh with Mithun for honest investing insights based on research and long-term wealth creation. Thank you for watching. I will see you in the next video. Jai Hind.